At the end of January, every financial expert and news anchor had one word in their mouth.
GameStop?
This GameStop trading saga.
The GameStop saga. GameStop.
Okay, it's blowing up.
But as the GameStop mania comes back down to earth, what caused this mall video game store to have one of the largest single-day stock exchanges in history? And did the people behind it send a warning shot to Wall Street about their future? Months before GameStop became the biggest story on Wall Street, a little-known forum on Reddit called WallStreetBets had hundreds of users chatting about potential profit.
Our description of WallStreetBets is it's like 4chan on the Bloomberg terminal, and that's pretty accurate. I'd say the mood is very jovial. You know, everyone's here to make money, obviously, but also to have a good time, to laugh about things that are going on in the market. So if you have an idea for a crazy trade, WallStreetBets is definitely the place to post it.
It's kind of a knowledge base, but a pretty different knowledge base than you'd expect.
Redditors talk stocks they like, share about wins and losses, and definitely share memes and GIFs. And wielding Avengers analogies and spaceship emojis, more and more users started to notice that one stock in particular could be their rocket ship to unimaginable profit. They noticed major hedge funds were uniquely betting on GameStop to crash, and risking a lot of money in the process. If someone believes a stock is overvalued, and that in the future that stock price is going to go down, they can short it. Essentially, that's when someone borrows the stock from the owner through a broker, then goes and sells it on the marketplace at its current price. Then, when that stock price finally drops, they buy it back from the market and pocket the difference. Now the risk comes in that if that stock price goes up, then whoever borrowed that stock and sold it away, well, they either have to buy back those stocks at a loss or pay a premium to wait if the stock goes back down.
GameStop is a company that was highly shorted. That means there were a number of people betting that the company's stock would crash. And the Reddit community discovered this. They realized that it was a vulnerability, that some of the most powerful hedge funds in the world were all betting that GameStop would crash.
So many investors thought GameStop stock was going to crash that more stocks were being shorted than were even available to buy. That's when the short squeeze was in play. See, if enough people from WallStreetBets and others following their lead bought GameStop stock, they'd drive that price upwards. But then all those investors who had shorts but couldn't cover their losses would be forced to buy more of those same stocks they had borrowed, driving the stock price even higher and skyrocketing it to the moon.
GameStop is kind of an iconic memory for a lot of people who used to buy video games there, who used to have their childhood kind of linked to the brand. So that combined with, I guess, a general feeling of, let's not say hatred, but discomfort with the 1% and people who have so much money that they're able to influence these kind of things, I think brought a lot of people in.
One of the biggest things we saw that led to the mania in trading was the pandemic itself. You have so many people, especially millennial and Gen Z men, who are stuck at home, they're bored, and they have time on their hands. They also have a huge number of resources.
Trading apps like Robinhood and others have exploded in popularity, allowing users to buy and exchange stocks in seconds from the swipe of their thumb.
Nowadays, you download an app on your phone that you have everywhere with you. You instantly fund it. You create your account in seconds. You have an interface that turns it into a video game. You buy options, which are a complicated instrument. They just say, okay, I think I want to do Apple, and they click buy, and then you get confetti animations to celebrate.
There are people who have their DraftKings account open, their Xbox open, and their Robinhood account open, and it's like looking from screen to screen, toggling between all these different things. It was the perfect storm.
Once the mania began, the social media commentary exploded.
Today is going to be the craziest day in stock market history.
All of you guys out there who are f***ing up the stock market and making hedge fund managers cry are my heroes.
It didn't have one focal point. It started a couple of weeks ago, and then the more people found out about it, the more people decided, hey, this is something I want to join.
So you have everybody pushing the market upwards and nobody pushing the market downwards. And that's the brilliance of how this works. They figured out this asymmetry with a little bit of money, with a lot of people, they can make everybody else pay for these trades.
WallStreetBet users found themselves not just making money anymore, it was a war with the hedge funds, and rallying together around dark night GIFs as well.
There has been this gigantic wealth transfer from young to older generations over the last 30 years. We've now seen a financial crisis, the Great Recession, where too big to fail, we were all told that we needed to save the banks for the good of everyone, and there are many people who feel like they didn't see any of that upside benefit. So there was this feeling especially among young people, that they had the tools in their hand, the availability, and they found this weakness that they could exploit in companies like GameStop.
At its peak, GameStop stock reached over $400 a share, which means if you had bought $5,000 worth of GameStop stock just a few weeks earlier, you would have pushed it to $100,000 in value. All the while, punishing the hedge funds to lose billions to cover their shorts.
So if you squeeze these guys enough, they can't sit there and wait for the prices to recover because the broker's pressuring them, saying, hey, you got to put more money on this collateral. They always have the threat of the owners of the shares saying, I want them back. So it's a really risky gamble for them.
But almost as fast as the GameStop stock skyrocketed, the stock price came right back down to earth a few days later.
The truth is, we just don't know the end of this story yet. There are the stories of the young Reddit investors who paid off all their student loans or bought a new house for their family or intend to buy a new house for their family with their winnings. But the reality is, you don't make money in the stock market until you cash out of your position.
The mood on WallStreetBets as the price of GameStop dipped below 100 just days after its record peak was a mixture of optimism and despair. But regardless of who made out with a profit or loss, the mania has certainly influenced how Wall Street is thinking.
Wall Street has recognized that there is this new investor class, a new retail investor who tends to be young and using apps like Robinhood. And by some estimates, these young investors account for as much as 25% of the overall market.
People have realized that they can act as a regulator in some regard, right? Because nobody ever thought that they could be able to influence what a big hedge fund or corporation does. But now I think they realize that even when it comes to the stock exchange, if enough people believe in the same thing, they're able to influence it.
But what does it mean for the full system? Does it put the full stock market at risk? Does it have a potential ripple effect where you would ultimately see this level of mania in a handful of stocks impact the full stock market, in turn impacting 401ks and IRAs? And could it even have a ripple effect on jobs and the broader economy?
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.